Hi there, a very good morning and good afternoon to all of you, depending on wherever you're hearing me. This is Simply Stocks, and I'm live in this live session with you all. And in this live session, I would like to talk to you about a factor that many people are not pricing in the fact that this rally could be a bounce after all, and there could be a decline in August and September. So, this is an opportunity for you to take out bad stocks. Now, what are bad stocks? I'll just explain in a little bit. Plus, we'll answer your queries as well. So, let's get the session started. Priya, a very good morning to you. Hello, and hope other people also join in quickly. It's a very important session because a lot of you might be thinking that the current market move that is taking place is something that is sustainable. In my opinion, this is just a bounce that is taking place in many emerging markets, which comprises India as well. And there will be a sell off once the market probably goes up another 2-3% from here. So that's my call. So just to have give you an idea about the market, after all, it has gone up by around 1,000 points from the lows about a month back. Uh, Not even a month, probably 2 weeks back, 15,200 was hit, 15,170. It has gone to 16,200 or something. Maybe 16,500, 600 is a possibility this month. But then a short decline may happen by end of July and then throughout August and early September. I believe all these rallies, especially in the consumer stocks that we are seeing, that the stocks are rallying pretty well. They might just be relief rallies and an opportunity for you if you are looking to exit the position. So because I believe that August and September might end up being very difficult. Why I say that is that yes, there will be another rate hike in the US. There could be another rate hike here in India by August, and that is just to curtail the current you can say inflationary environment. But you can say a byproduct of that is, of course, you have a situation where inflation is curtailed plus the growth is curtailed. So a lot of these stocks, like I was saying seeing today, and I didn't spend much time, but a little bit what I saw was that uh, real estate construction companies were doing well today. So all these companies will I mean have you'll have a test of that them once their numbers come in August. So there are one or two reasons, at least 2-3 reasons why I believe that the market might not sustain these levels. Number one is that the rally has been pretty good from 15,200 onwards. So FIIs, foreign institutions plus large investors, large traders are getting opportunities to book profits. Whoever have gotten around 15,200, 500 at 16,200, 500, plus FIIs who have sold below 16,000 will again sell above 16,000. There's no question about it that they will not sell unless they buy 2-3 thousand crore every day for 4 or 5 days. I will not be convinced that they are coming back. So I don't see them coming back just now, but they will come back. I'm hoping by the end of the year or in this year sometime, but not at the moment. I think they'll get another opportunity and they will sell. Second reason why I believe that there could be heavy selling is that when inflation is curtailed, it looks good on the forefront that okay, 8.5% inflation goes to 7.5. I'm just giving you example, goes to 7% and all that. Then growth data comes about, and that looks extremely bad. So whatever is happening at the moment, uh, you have to agree with me that the current situation with respect to growth will be hindered for the next quarter, at least for the September quarter. So once that picture comes about, especially for a country like India, and we are not large market, I'm telling that time and again, we are not a US or a Britain or anywhere else, and we are seeing some crisis in the political environment in Britain as well in UK. So there could be a number of political, geopolitical, as well as the domestic reasons why the stocks will fall. And the first and foremost of them would be the rally that would already take place. So I believe just on the weight of the rally, if the market goes to 16 and a half thousand, you will see a market decline. Another reason why I believe that the market may fall in August and September is because of the worst of the results coming afterwards. So in July, from 10th of July, I think results of large companies would come in, especially companies like Infosys, TCS, IT, etc. And IT should do well with an environment where dollar is at 79 rupees and all that thing. So IT should do well. Then some of the top class pharma companies would come out with the results. Then companies like Titan, Asian Paints, etc. would come out with the results and their AGMs and dividends, etc. So things will look good by the 20th or 25th of July. And then things will start to sour when results of some real estate companies, some mid cap consumer companies, mid cap pharma, mid cap IT, even mid cap IT may do well, but their valuations are still stretched in some cases. So when they will come up by end of July and throughout August, you will see the kind of decline. So I'm not talking of the decline per se in the Nifty. It might be that the Nifty may just go down to 15,500, 600 and may return back. But in mid and small cap, we could see a decent decline, and we might see the indexes again heading towards 52-week low by August. So what one needs to do, why I'm saying all this, is that when the results are bad, and they would be bad for many of the companies, at least 70% of the companies, because of the high inflationary pressure. Although the inflation has subsided, but there will be high inflationary pressure. There will be one round of selling across the board. Now, once that is over and done with, probably in mid August, September, late August, I think from late August onward, there would be some sort of a bottom, and then things should move up from September onwards. And in earnest, should do well from October. We are seeing Nika coming out with an update that they're getting into men's wear as well, and they should do well in terms of sales, etc. So, hopefully, consumer centric companies which are going up at the moment may correct in August and September, but they will do exceptionally well in throughout October to March. So something like a Titan, a DMart, a Nika, a Polycab, an Astral, or Century Plyboard, etc. These are very good companies to invest later on, not at this point of time. I think there will be another round of selling that awaits us, but after another 1 or 2 weeks of rally. So by 20th or 25th of July, we should see this topping out this move, and then another round of selling. Now, that round of selling could take us on the Nifty to 15,400, 500 minimum. But even I won't be surprised if the market goes to 14,000 by end of August or mid September, and there will be total pandemonium on the streets and everything. But that is where the market will reverse in earnest. So that is the call, and that is why it is very important to exit your investments, trades which have gone wrong, and which you believe that the numbers might not improve going forward even 1 year down the line, and you should get out. So stocks which are highly debt driven, which have high debt, is a complete no no. Stocks which have pledges is a complete no no. Stocks with declining profitability, an expectation of declining profitability because of higher raw material cost, or because of metal prices going down. So metal companies, etc., will have reduced profitability going forward, and that is the clear, you can say, uh, target or goal of all governments, all financial, you can say, uh, the financial banks, the largest banks globally, to curtail the inflation of the commodities. So commodity companies are no no. Companies which are making less profitability are a no no. Companies which have high debt is a complete no. Companies which did well because of one extraordinary factor or the other is a no. Companies which are more opening up trade, which could do well when things are absolutely normal, is a yes. And those are the companies, even in those companies larger companies are better. So some of these companies I might be invested in, so that's a disclaimer. But something like an Asian Paints coming back from 2550 to the way it is doing at the moment, Pidilite the way it is coming back, Nika looks attractive. Dixon, even if it goes to 3000, 3100, I think these companies will have a good run for 3 4 months from October onwards, not at the moment. So these companies may decline again, but from October onwards, we'll see a lot of traction. But stay away from companies which have high debt, which had produced good numbers during the better commodity cycle, which had produced very good numbers during the when the market was, or the, you can say, the economy was closed, etc. So you have to stay away from there. Also, you have to stay away from, you can say, airlines. Have always talked about that it's a sector where it's a no-win game for small investors. So it's probably, your now it is showing through with whatever is happening in SpiceJet. I believe, just a one liner here, that SpiceJet is not one airline where these problems are there. The problems are across the board, but somewhere it is more, somewhere it is less. There will be issues. Although ATF prices have come down, there will be a lot of issues, because these companies, there's a lot of competition, not only from airlines but from railways, etc. And people like to travel on car, railways, etc. as well, other than airlines. So there could be a lot of stiff competition. So there are particular sectors that need to be avoided. You see the rally that is taking place currently in the real estate sector. These are stocks to probably book out of in a month or month and a half time, if the rally certainly sustains, because these will be hit badly, because that is the clear aim of the RBI, that is the clear aim of the large banks globally, in order to curtail the inflationary pressure. Financial institutions, large financials, you can say, the financial system globally is trying to curtail growth, so that inflation gets into, you can say, some sort of a, they can have some sort of a hold on inflation. So this will continue for another 3 months, and after that, market might end up pricing in. I think the market will price that in around 14,000, 14,500, and then I don't see much downside from there on in. So I kept saying that. I'll still say it, that even if the market goes higher from here, 3 4%, it doesn't mean it cannot break the previous lows. It can very well do that. I think the fall will be excruciating, and fall will be painful. So we'll see that happening in August, September. If you have companies which I have earmarked that want to avoid, probably you can take them out even with some losses, and have cash on books, cash on your hand, to buy into very good quality, debt free growing companies. From a 2 year point of view, I think by 2024 you'll see this market would be in a completely different zone. And I'm not saying that by 24 the move will happen. The up move to 20,000, 21,000 would have already happened on the Nifty by 24 January, February. That's my assessment. Remember that in 24 Feb, there might not be any budget, or budget will be very small. The big budget would come in July, because after the elections, because the elections are very nearby for the country. So there could be a very smooth run from 23 March onwards, and the precursor of that could be from 22 October. So that is why I'm saying that there could be, uh, for the next 2 3 months, more volatility and further decline, so that whatever we or whoever weak bulls are, or whichever weak bulls are in this market, they will just throw in their towel, and the market will nosedive, and then the big move will take place. So that's the call. So I'm ready to answer your queries. Kindly use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. I would say TCS. I think TCS around 32, 3,300 looks pretty good from a 3 4 year point of view. It's a doubler in 3 to 4 years. That's my assessment on something like a TCS. See, Dixon, I believe on declines to 3,000, 3,200 are good levels to buy. It has run up. I think there will be further decline, and those levels of 3,200 would be good. FL around 900, 950. Even current levels are good, but declines to 900 would be better. I think FL is also set for a big move once things completely normalize. So that's a call. Okay, so yes, so I think SpiceJet, that could be one of the reasons, Harsh. I did think about it, and that could be one of the reasons because of the power that person has, but we don't know. So unofficially, there could be that reason that why this is happening with SpiceJet, but really we don't know. So I don't want to comment further because one things have to be established only to make a statement on that. But yes, a winner after what is happening with SpiceJet could be another a new entrant that could come in because Indigo already has its market share. Indigo will also have a win-win situation with whatever is happening. So you can't say that one person or an entity that is coming into the market might be doing that. It could be not. So we cannot, you can say, for them death. So we should not sell the portfolio. It depends on Yashasvi, what kind of portfolio you are having. If you are having trouble, you can email me for that. But it is not a situation where complete portfolio has to be sold off. It is a situation where if you are not in heavy losses in some of the stocks which you know are in debt, are not growing that well, and could be in debt for a foreseeable future, and their gestation period for their business cycle is long, you need to buy into good quality companies which deal in cash, which have cash on books. So that's the call. I think LT Foods not at this moment. So Buchi, it is not a long now. If you are holding from long term, it is time to start booking profits here because monsoon season is always good for such companies like rice companies, etc. But then things starts to get bad from August, September onwards. So it's like a trade. It's not a very long term bet, in my opinion. Absolutely, I think Naukri Priya is a hold. Uh, I believe these are good levels to accumulate, but don't do it now. Do it in August and September. If you have money, buy more. A very strong company at that, and it's getting sold off because of what is happening with Zomato, etc. But remember that they have very little stake in something like a Zomato. So the company is producing very strong numbers, so it's a hold. Absolutely, it's a doubler over the next 2 to 3 years. Another stock that could do extremely well by the time 2024 comes up. So that's the call. Kilpest, my opinion is that it's very attractively priced now. If I had money, I would have bought at these prices. I don't have cash at the moment. I'm fully invested. Otherwise, I would have bought a reasonable chunk at these levels. Very interesting level. It could go to 270, 280. I'm not ruling that out, but very attractively priced. One clean year would be this year for Kilpest, and hopefully they'll produce 75 to 80 crores of sales, and that should be around 25 rupees of EPS. Based on that, at 14, 15 times earnings, very attractively priced. Kilpest 13, 14 times. See, advanced enzyme is a hold. I don't know. This is one of the enigmas of the mid cap market, small cap market, that this company hasn't performed. I still believe I'm very positive on the stock. The kind of numbers that it has produced in difficult times, the kind of numbers it has produced in the bull market as well, with 40, 45% margins, now 32% margin. It's a hold at these levels. The way it has fallen, at least it's a hold for a rally, and then probably take a call at 360, 370. So that's the call there. Difficult to say. I think both are expensive at that, and both are producing very good numbers. Probably you can split the money in both. Polycab is slightly better valued at the moment compared to KEI, so that's the call there. Well, it's a sell. Aditya, it's a sell because, in my opinion, Metal had the rally of its time. It was a sell a year back. I have been saying that. So if you get any opportunity, just exit all positions in metals. I believe another round of heavy selling could await us in metals in August and September. So that's the call. Birlasoft is probably good at these levels at 330, 340. Yeah, among these. That would be my call. Okay. So Hindustan Foods, if you have a 4 5 year view, you can accumulate at these levels. If you are holding, just hold, do not add. Add on decent up move. CDSL is an avoid. CDSL was a play for LIC IPO and everything. It has all gone through. Everything is done and dusted. Probably it's a buy below 1,000, closer to 850, 900, not at these levels. And that's the thing. APL Apollo, very good long term, you can say stock to buy into, not for trade, but long term, it's a good buy, APL Apollo. Yes, I believe it's a disclaimer. I have the stock, Mr. Pawar. I believe for 5 years, it can do wonders if the results continue. Just wait for the results this time around on Mastec and then take a call. Do not jump to buy into the stock. But yes, it has corrected appreciably from the top and looks very attractive. Currently, it is trading at, I think, 18 times 1 year forward earning or something like that. So, Joseph, see, the preference is always with stocks in which I have done a thorough research on. Mastec, KPIT, Birlasoft, TCS, Tata Elxsi. In those companies, I have done in and out research, and those companies look extremely good. Not to say even L&T Infotech, but in LTTS again, the numbers per se look good. I'm not saying I don't like it or something like that. It's just that I have not done extreme research on that, so I won't be able to comment as much as I would be for the other companies as I mentioned. So that's the one. So Vinod, I'm not getting your stock EPS that you're saying. Tarzan products, I have not looked at the stock in detail, so I won't be able to comment on it. So that's my call. I don't know. In Mindtree, there is a merger. I don't know the merger. You can say what is the calculation that comes about. So I won't be able to comment on Mindtree. So that's my call. Rolex rings I have not looked at, so I won't be able to comment. Rajratan Global Wires, again, a very good company from a 3 to 4 year perspective, not for a trade. Yes, these are good levels to get into it. I think, again, these companies will do well when global economy does well. Probably it will take 6 8 months. So have a 3 4 year view here for good returns. Very positive on auto ancillary because of the kind of you can say you have situation where the raw material prices are coming down. It's a big positive for auto ancillary companies. I still believe the you can say the undervalued stock here is Motherson Sumi. Jamna Auto is one of my favorite. It has already run up. I have given calls on Jamna Auto on Patreon on number of times. Endurance Tech look good here. So that's another uh, company to probably look at. So many companies are in there. These are some of the best. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thank you.